So this is Joseph, and you're watching Credit Commit, where we're committed to building your credit. Today, we're actually going to go over the blueprint action plan, step one, where we're going to actually talk about secured loans and secured credit cards. If you're interested in more of these credit videos, you can go ahead and subscribe below. We do have daily content. And if you do have the blueprint action plan, this is a playlist right up here that's going to go over all the steps. So it's going to have the videos in order from step 1 to step 5, and as well as the bonuses at the bottom of the blueprint. And if you don't have a copy of that, there is a link in the description. So go ahead and look in the description and get the blueprint action plan. Secure loans. Let's talk about secure loans. So if you don't have a mortgage, if you don't have a car note, if you don't have any other type of loans, then you'd want to get a secured loan. You could get one with a credit union if you have a your local credit union, or there's a website called Self-Lender. There is a link in the description for Self-Lender. Self-Lender is something I actually used. So with Self-Lender, there's different amounts that you can pay a month. It's kind of like a savings account. So with the secure loan, think of a savings account. So with Self-Lender, I was paying $25 a month for 2 years. So every time I made a payment, it'll report to the credit bureaus of an on-time payment. And that's what you want. You want to establish that you're able to make payments on time for a long period of time. So that's why I did my secure loan with Self-Lender. That did boost my score. Initially, when I first got Self-Lender, it boosted my score 34 points off the bat just for adding that to my credit, because I didn't have any loans at the time. If you have a car note and that's reporting positively, then you don't have to worry about getting a secured loan. This is for somebody that doesn't have any loans. That is going to be part of the credit mix. Payment history is 35%. And your 10% is the credit mix, which would include that as well. That'll be part of the credit mix, and that'll be part of the payment history. And also the length of credit history. While that account's open, that loan's open. That's why I did it for 2 years. So that way it could be a longer amount of time open, as well as a lot more payments every month for 2 years, which would be 24 months. That's 24 on-time payments. If you have a credit union that's local in your community, you can do it through them. It's the same concept as Self-Lender. You go in there, you ask for a secured loan. They're going to know exactly what it is. So you're not actually getting any cash up front. You're going to be doing payments, and once you pay everything off, then they give you the money back. So it's kind of like a savings account. It's kind of like a CD. Technically, it is a CD. That's where they put the money. They put it into a CD. So that's what a secured credit loan would do. It would boost your score because, again, it affects different parts of the FICO score. It'll affect the credit mix, which is 10%, payment history, which is 35%, and then the length of the credit history, which is another 15%. So that's what a secured loan would do, and that's the effect that it would have on your credit. This video is teaching you how to get a higher FICO score. This is how you play the FICO game. I don't encourage debt. Do not get into debt just to play the FICO game. Let's talk about secured credit cards. So a secured credit card, usually for security deposit, that's going to be your credit line. So if you put $200 down, then you have a credit line of $200. The only time you get this money back is usually when you close the account. You normally don't want to close the account because you want to have that length of credit history. But if for any reason you do close the account, you will get that security deposit back. There are exceptions, like with Capital One. Usually they'll make you pay like $49 to $99 and you'll get a $300 credit limit. But if you do have to go that route, there is Opensky. Opensky doesn't give you a ding on your credit report. It doesn't run your credit. It just automatically gives you an account. And you don't need a checkings account with Opensky. I do read a lot of good reviews about Opensky, and that is what I always recommend. So that way you don't get a ding on your credit for a hard inquiry, because they won't give you an inquiry. You're also going to want to keep that balance, the utilization for a secured credit card or just a credit card, low. You want to keep it under 10%. And if you can't help it because the limit's so low, like $300, if you're maxing the card out, you're going to want to pay that off before the due date. Maybe 7 days before the due date, I'll pay like $250, and it's just reporting the $50 to the actual credit bureau. So that shows your utilization is pretty low. You're going to want to keep that utilization low. That's something to keep an eye on. And you're going to want to do on-time payment. Those are two factors that is going to affect your FICO score. So payment history would be how long you've been paying on something. So that's another reason, another pro tip. You're not going to want to close any credit cards that are owed. You want to keep them open for as long as possible.
So that way you have history going back years. So say you had a credit card for 7 years. You got 7 years of history paying on-time payments. That's excellent for credit. When you open a new credit card, it's going to change the average history. So if you have a credit card that's for 8 years, you had a credit card for 8 years, then you opened up a new credit card. Now the average length of credit history is only 4 years, and you want to keep it pretty high, around 7 years. You don't want to really open credit, but if it makes sense, then you want to open new credit. You get an American Express card where you're earning points or cash back, then it makes sense to add that to your arsenal of credit cards. If you're building credit, I'd want to open everything at the same time. So let me give you an example. Say you wanted to open up a secured loan and a secured credit card. I advise you to do those at around the same time, so that way your average credit age, it ages at the same time. You're not opening a secured credit card this month and then 3 months later you open up a secured loan. Now that's going to bring your age down even more. You want to open them up around the same time, and then it starts maturing at the same time. So that's just something to take into account when you're thinking about, you know, opening up some new cards. You want to just, I get them out the way at the same time.
And if this content is value to you, go ahead and hit the thumbs up button and share this with somebody that it can help. If they don't have the Blueprint Action Plan, have them download the Blueprint Action Plan. This will help increase your credit score. They need more of a visual aid. They could go ahead and go through this playlist. The playlist is going to be right up here. Go ahead and subscribe below. Again, the Blueprint Action Plan is going to be in the description, so make sure we check that description. That's going to have the links for anything discussed in this video.
We do have daily videos, so go ahead and subscribe below. We got another video to the right within the playlist. It'll be the next step, actually, to the blueprint. Subscribe, click my face below. Let's go ahead and get into the next step. What you still watching for, man? Click the next step. What are you doing? Click the next step, man. Click the next step.